dread tax season, wondering how big of a check you'll have to write to the IRS this year? If the IRS is going to keep any of your money this year, or if they kept any of your money last year, then we have a simple trick that will help you keep a lot more of your tax money this year. And it can even earn you a refund on the taxes you paid last year. What we're going to show you is incredible. It's accepted by the IRS. Our CPAs are happy to nerd out with your CPA and explain all the nitty-gritty details, or with you directly if you're into that kind of thing. It's been around in one form or another for a number of years now. It's a method for you to get a 20% discount on your federal taxes this year, and it can also get back the taxes you paid last year. Bet you thought that money was long gone, didn't you? Well, it's not. Here's how it works, the condensed version of it anyway. For as long as electricity has been a thing, regular businesses and nonprofits, things like schools, churches, etc., have wanted to save money on their power bill. They pay hundreds, thousands, or even tens of thousands of dollars every month to rent their power. Utility rates go up, and they pay it. What choice do they have? If they stopped paying that bill, they'd be out of business real quick. Then this thing called solar came along, power from the sun. Homeowners and businesses alike started owning their power, and usually lowered their total monthly power bill. Once the solar is paid off, they virtually eliminated their power bill. This sounded like the perfect plan to many other people and businesses, until they found out that they weren't going to save money by going solar. Instead, they were going to pay a little, or often a lot more money for their power for a long time. That's because a key part of the solar math is being able to take advantage of the tax credits that go along with it. If you don't pay enough federal taxes, or like schools and other nonprofit entities that don't pay any federal taxes, then you can't get the federal tax credits for solar, and your solar just got significantly more expensive. That, in turn, means you're paying more to have solar than you were paying without it. It just doesn't make financial sense. There are some tax laws that provide a way around this. The entities that want solar but can't use the tax credits can instead lease to own their system. What this does is allow a holding company to pay to install solar on that customer's building and to collect a monthly payment from them. That holding company then gets the tax credits, and the end customer simply pays a lower monthly payment to them than they were paying to the utility company without solar. After a period of time, the system becomes theirs and their power bill is virtually eliminated. It's all well and good, but you're sitting there wondering, when is it going to get to the point about me getting more of my taxes back? Alright, to the point. Here's an example of how these tax laws can benefit someone like you. Let's say Widgets Incorporated paid $50,000 in federal taxes last year. They expect to pay another $50,000 on this year's taxes. They decide to invest into one of these solar projects, so they put $80,000 in. This money goes towards installing the solar. Now, when they file their taxes, they apply their new solar tax credits. They don't pay the $50,000 to the IRS for this year, or they get a refund on it if they've already paid, and they get the $50,000 back from last year's taxes. That's $100,000 on their bank account from the IRS for just $80,000. That's an extra $20,000 on their bank account, $20,000 that the IRS would have gladly kept. In case an extra $20,000 in their bank account wasn't reason enough to do this, they also get around $100 a month from the solar payments from the end customer for the next 6 years. That's another $7,200 for a grand total of $27,200. $27,200 that they otherwise would have just let the IRS keep. This doesn't only work with $100,000 in tax liability. There are millions of dollars available in these solar tax credits, just waiting to be claimed. You could do it with $10,000 in tax liability and make $2,720, or on $10 million in tax liability and make $2.72 million. This program is tailored to work for you. Or you can do nothing and make $0 on that money you're sending to the IRS. There are other ways to make money, but they all involve some risk. You may lose the money you're trying to turn into more money. This is using money that otherwise was already lost, so there is no risk. If you're ready to take some of your hard-earned money back from the IRS, call us now.